Deven Choksey joins in. Deven, while it was a thumbs up on all counts for Reliance Industries, is the stock priced to perfection at the current levels, or would you say the going has just about begun to get good?
Well, I think on one side you have all the capex programs completed, which means that the capacities are now coming onto the stream. Refining would be 100 million tons. Along with that, the feedstock change coming in would easily contribute, I think, in the close vicinity of around $1 billion into the company's performance with the new feedstock coming in. At the same time, you have the petrochemical and polymer businesses also, I think, completing the capacities, and they are running at a rated capacity or above, little above that in some of the product streams. So I think largely it is going to be a core business which will be driven by the volume and also the profitability, which is likely to show at least, I think, marked improvement into the company's performance in the financial year 18-19. This year maybe, I think, 6 months benefit or 9 months benefit in some of the product cases where the company would show relatively better performance. So one could safely assume that around 30 to 35% improve growth into the profits in the full year of working in 18-19 from core business alone. On the other side, even the larger part of the capex getting over for geo business, and I think marginal capex will continue in the current year as well, is expected to show revenue visibility of around 40,000 crores plus, I think, in a full quarter of working in subsequent period, that is in second and third quarter and after. In such kind of a situation, the annualized revenue of 41,000 crore could translate to 16, 17 or 18,000 crore worth of EBITDA for the company. So again, I think this is showing signs of cash generation for the company eventually. And the retail business is already, I think, rated at EBIT level at around 250 crore per quarter, which is around 1,000 crore, 1,200 crore. So all this put together, I think that the Reliance journey has just begun. I would think that the stock price definitely shows the signs of going up to 1800 in next 12 months, 6 months to 12 months time, or maybe, I think, if you are holding for 2 years and above, I think you are likely to see 100% kind of an appreciation in the stock price over a 2-year period time.
Deven Choksey, I'll take that cement point slightly forward, because I'm getting a sense that happy days are indeed coming back for the cement sector. Himang believes that you should buy all India players, because when demand comes back, operational efficiency and operating leverage would be at play. But here's the data. India Cement is available at EV per ton of about 100. Ultratech is available at a EV per ton of 195.
Yes, Nikunjan, I think that's where I think the main issue is all about. You will have to select the company which is proven discipline as far as, I think, their financials are concerned. Pan-India players largely, I think, are like Holcim Group or Ultratech Group, who are basically, I think, having at least one confidence one could have is that, I think, they are having a relatively better financial discipline compared to some of the regional players. Having said that, I think some amount of premium is also justified to them, also because of the fact that now the situation is that they are basically operating in a country where the projects are taking place everywhere. And cement being a local commodity, if you have the local presence well captured, in such situation, I think you tend to get slightly better profit performance going forward. Most of these pan-India players have still not been fully utilizing their capacities. I think they have been marked off their full capacity utilization. According to me, I think with these kind of projects coming up in the country, including in the infrastructure space, the cement companies are likely to show, I think, higher capacity utilization. Our calculation says that, I think, if you end up improving the capacity utilization by 5%, the bottom line impact on the cement companies working would be close to improvement in the growth of around 15 to 20% depending on case to case, as far as, I think, the profit growth is concerned. So certainly, I think we do hope and expect that, I think, higher capacity utilization could result into better profit performance for most of the cement companies. So Pan India certainly would appear better. However, don't overlook some of the regional players like Ramco Cement, who have got substantially large capacity and who are big beneficiaries of the southern market and the growth therein. So financially disciplined companies with a cash in balance sheet, I think one could also equally look at some of the regional players who are, I think, having better opportunities going forward.
Deven Choksey, for last 3 years, Bosch, Page, MRF and to a large extent TTK Prestige have dominated Indian markets. Which are the names which do you think are likely to dominate Indian markets for next 3 years? I mean, like we always say in the markets, courses remain the same, the horses they change.
Well, Nikunj, I think it's not an easy answer to give honestly. I think as to which are the premium value stocks, I think which will continue to dominate the market. But as I see it, I think some of the next 3 years probably I think people would take more risk. Vis-a-vis, I think sitting on a safety measures. I think or safety stocks like premium stocks, people would take more risk. And according to me, I think the risk could be taken largely in the area of automobiles. I see, I think, a change coming in a big way in most of the auto companies, and probably I think you are likely to see a larger amount of volume growth as well as the product innovation led growth coming in many of the auto companies. So that is one area which I am reasonably confident about, bullish about. The second area where I am confident about is the companies which are into the electrical equipment business. Given the kind of spread that the country is making in the area of transmission business, probably some of the electrical equipment suppliers I think would have really good time in next 3 years, and they are currently quoting at a little premium valuation, but the kind of potential under which they are operating, they could possibly generate higher amount of revenue and profit. So the growth in profit and revenue could be far more smarter and higher in coming 3 years. So largely I believe that I think it's time that one will be starting to take some amount of risk more than sitting on the safety aspect and buying in the premium at this point of time.
Deven Choksey, give me your top investment idea with just a one line on it, why, and with the price target. The time period could be about 12 to 18 months, and any idea which is not Reliance.
Well, I think I have been liking companies in the electrical equipment space, and within that I think we continue to buy preference on Schneider. This is one company which is basically, if you look at the way in which their product offerings have shaped up eventually, they are largely geared up towards the solution business more than the equipment business. And as we see the alternate energy segments operating in a systematic manner, the renewable energy business operating in a systematic manner, the integration of the power sources and integration of the power grids would become, I think, important. And that's where I think the Schneider could possibly play a decisive role. It's not a 6-month story, Nikunj, but probably if you are taking a directional call, I think this is a story which would unfold largely over next 2 to 3 years time, where you hold the potential of making a large sum of capital appreciation out of your investment. So I think I would rather say that I think 6 months it may definitely give some return, but I think you hold on this particular stock for at least 2 to 3 years. That would be the approach that I would like to carry in the investment.